These are main, these are main.
Thank you.
The purpose of this meeting will be to review the preliminary audit report for the fiscal year 2024-2025 with the auditors. And I'll turn it over to Greg.
All right. Well, thank you, Mr. Mayor. And as everyone knows, this time every year we review the audit, and then it's placed on the agenda to accept the audit report. So with that being said, our fine finance director, Mr. Holt, I'll turn it over to you.
Thank you, Greg. We have Erica Sager with us. She's the managing partner of our audit, and her and Hunter and Seth and others did a lot of great work on this audit. And Erica will have to go through some required communications like she did last year. There's some protocol things about how we approached the audit, what we did, what their responsibilities were, and then ours were. And then she's just going to hit some highlights of the audit. I can tell you overall, we landed about where we thought we was going to, or maybe a little bit better. And so we're looking good as far as what we call now a unmodified opinion or a clean opinion. And so Eric, I'll let you do what you need to do, but you got to do it all tonight since you're.
Wonderful.
That's good. So turn it with you.
So again, my name is Erica Sager. I did serve as the engagement principal. Hunter was the senior manager, and he would have been here tonight usually, but we have CPE over the next 3 days, so he's actually in Nashville while I'm here. So.
And Eric, let me ask you, just so they know, and they probably do, how many years now have y'all been doing our audit?
This is our fourth.
This is the fourth, or this may be the fifth year.
Maybe the fifth year.
Okay. Yeah.
So as Robert mentioned, I do have to make some required communications to you. They remain unchanged from last year, but still have to go through them. I'll go through them quickly. If you have any questions, feel free to stop me. First of all, professional standards require that we have this communication with you to talk about the results of our audit. It's a very important process in the audit process. So first, I want to thank you for the opportunity to serve as your external auditors and business advisors. And secondly, to thank Robert and the team for all of their work. They were prepared, they had everything ready for us, very responsive during the audit process, which made it very smooth. So thanks to all of y'all. Independence, each year we want to confirm to you that we are independent with respect to the city. As Robert mentioned, most of the folks that were on the team again this year were similar to the prior year. That also makes it a little bit more effective because we're not asking the same questions over and over as a brand new auditor. So that was helpful. Our responsibilities are to plan and perform the audit to obtain reasonable rather than absolute assurance about whether the financial statements are free of material misstatement and that they are presented fairly in accordance with generally accepted accounting principles. Most significant estimates in the city's financial statements relate to your pension and OPEB. Both of those estimates were determined by an actuary. We did look at those reports to determine that their assumptions that they used were reasonable in relation to the financial statement as a whole. Significant accounting policies of the city are included in Note 1 to the financial statements. There were no new policies during fiscal year 25 and no changes in your significant accounting policies during 25. There were no alternative accounting treatments. There were no consultations with other independent accountants, no disagreements with management, no difficulties encountered in performing the audit, no material fraudulent or illegal acts noted during the audit. We did read the city, in the report there is some other information that we do not opine on. However, we did read that information to make sure that it was materially consistent with the rest of the report. Other procedures performed in conjunction with the audit, you did have over $750,000 in federal expenditures, so we did perform a single audit for fiscal year 25. That threshold does increase to $1 million in fiscal year 26, but you'll be well above that, so we'll probably have a single audit for 26 as well.
And that's usually a result of our TDOT grants we get to buy our audits. If we get more than $750,000, there's some special work they have to do.
And then we'd like to let you know of upcoming accounting pronouncements. There are two that are upcoming, GASB 103, GASB 104. We don't anticipate either one having a material effect on your financial statements, but we will work with Nathan and Robert and the team to make sure that anything that needs to be incorporated into the financial statements for fiscal year 26 are incorporated. At the end of each audit, we do ask for management to sign a management representation letter Basically, it says that everything that they have asserted during the audit is complete and accurate. We will get that signed after approval of the report today. And lastly, if there were any findings or internal control issues, we would issue a management letter. However, we did not have any for this year, so there is no formal management letter to discuss. Are there any questions about required communications? Okay, if not, we will switch over to the financials, and you have those in front of you. We're going to flip over to technically page 1, but it's a few pages in. It's the independent auditor's report. So we did issue an unmodified or clean opinion. It covers pages 1 through 4. A clean opinion is the best opinion you can receive. No findings, no material weaknesses, or significant deficiencies. Pages 5 through 16 is where we're going to spend the bulk of our time. This is management's discussion and analysis. And basically what this does is go over your highlights for the year and comparisons from the current fiscal year to the prior fiscal year. So if you look on page 5 in the financial highlights section, you can see that assets and deferred outflows of the city did exceed its liabilities and deferred inflows by $268,265,836. That is the city's net position for fiscal year 25. Of this amount, $108.8 million is unrestricted, which means that those funds can be used by the government for ongoing obligations to both citizens and creditors. Overall, the city's change or increase in net position was $13.6 million. At the close of the current fiscal year, the governmental funds reported a combined ending fund balance of $95.5 million, which is an increase of approximately 2.1 over the prior year. At the end of the current fiscal year, the unassigned fund balance for the general fund was $22.9 million, or 45.7% of the total general fund expenditures and operating transfers, which totaled $50 million for fiscal year 25. The last bullet point, the city did maintain Moody's investor service rating of A1 and the S&P rating of AA on the city's outstanding debt. We're going to skip over to page 9. The information on pages 6, 7, and 8 basically describe what the fund financial statements are and what the differences are between your fund statements and your government-wide statements. But moving on to page 9, this is your condensed changes in net position. So you, as I mentioned, you have an increase of $13.6 million for fiscal year 25. And those changes are primarily due to the 3 bullet points noted here. Your charges for services increased approximately $3.1 million, or 15.3%. Your operating grants decreased by $733,000, or 15.5%. And that decrease is mainly due to the decrease in mass transit grant revenue. As noted here, this was due to non-typical increases in funding from the state of Tennessee for transit-related projects during fiscal year 25. And then the last bullet point, overall expenses for the government increased approximately $6.8 million, or 10.2% over the prior year. And this is mainly due to the city's efforts to offer competitive compensation and benefits to all departments, as well as the increases for capital-related expenditures. If you flip over to page 10, this is a chart that shows you your revenues by source for your governmental activities. And our focus is going to really be on these last 6 items. These, you can see that your most significant balance relates to your sales tax, which is 24%, and then your gross receipts tax, which is 18%. It's important to point out that your gross receipts tax is a tax that's levied on the gross income of the businesses in the city. And so the total of these 6 taxes account for approximately 68% of your governmental activities' total revenues. For the last 4 fiscal years, the city has had a very stable revenue amount, it's been at or slightly below 14 million in each of the last 4 years. And it's worth noting that this revenue line was less than 8 million 8 years ago. So the city has seen some really impressive growth. I know we've talked about this many times, even through COVID and the subsequent years, the growth was pretty substantial.
Can I ask you a question?
Sure.
Which, as we know, and which we're proud of, is our property tax. Of course, it's not much of just the 2%. What do you see in other cities that you've done audits in? What percentage are a lot of those compared?
It's a significant portion, but, I mean, yeah, it really is their largest portion. I don't really know the percentage off the top of it. It really varies depending on the size of the city.
Okay.
But it's a significant portion.
Okay.
Like you look at someplace like Newport,
Yeah.
it'll be 2/3 of their revenue.
Okay.
Anybody in the rural area.
Or the-
Which the county, they
Yeah,
have,
the
that's
county,
how
that's a
they
big
Right.
operate,
That's how they function.
through property tax, but municipalities are a little different. And of course, we're really different.
Yeah, we're really different because of our tourism base.
Sure.
Right.
Yeah,
Pigeon Forge is similar.
yeah. Thank you.
You're welcome. Moving on to page 11, this talks about your business type activities. You can see that your business type activities increased approximately 3.6 million over the prior year. And that's mainly due to these two factors. The water and wastewater funds had combined operating revenue of 12.6 million and combined non-operating revenue of 621,000. The above items resulted in an increase in net position of 3.6 million for the wastewater fund and compared to an increase of 1.1 million in the prior year. So something I always like to point out related to your business type activities is you want to make sure that you have that operating income. You don't want to see an operating loss in those two funds, because then at that point, that's when the state steps in for you to take a look at your rates and do an impact study. So that looks good. We'll flip over to page 13. We do include a summary of Rocky Top Sports World here for you. Overall, they had a decrease in their net position in fiscal year 25 of about 464,000. But it's important to note that the depreciation expense for Rocky Top is about 897,000 for fiscal year 25, and that accounts for approximately 24.3 of their total operating expenses. So again, this depreciation number is very high, and it is non-cash. So that's what forces that decrease every year, is the impact of your depreciation expense.
Was that depreciation similar to last year's?
It was, it's
Yeah.
a little bit more, but.
A little bit more last year, did it go down?
Yeah.
It's very similar, but as they're continuing to add fixed assets, you're gonna see that continue to fluctuate. Then at the bottom of the page, for your governmental funds reported a combined ending fund balance of approximately 95.5 million. And as previously noted, approximately 24% of this, or 22.9 million, is unassigned fund balance, which means it is available for spending at the government's discretion. From here, we're going to skip over to page 15 to talk about some general fund budgetary highlights. Your actual general fund expenditures were lower than final budgeted expenditures by about 4.7 million, or 12.1%. And this variance is due primarily to certain capital expenditures that were encumbered but not yet spent as of June 30, 2025. The next section talks about your capital assets and debt administration. For fiscal year 25, major capital asset events are listed here for you, but two that we wanted to point out were approximately 24.9 million was added for various building and infrastructure projects. Those included the Public Works Complex upgrades, mass transit complex, and renovations to the aquarium parking garage, Mills Park, trout facility, and bowling center. You also had about 2.6 million in new vehicles and equipment added during fiscal year 25. If you flip over to page 16, this discusses long-term debt of the city. At year end, you had total bonded debt outstanding of approximately 67.2 million, And you can see here in this chart, it breaks it out between your governmental activities and your business type activities. So overall, the city's total debt increased approximately 6.9 million during the current fiscal year. That was mainly due to two new debt issuances of 4.8 and 4.87 issued within the governmental activities and proprietary funds respectively. And this was offset by current year principal and interest payments on the current debt. And again, the city maintains a debt rating of A1 for Moody's and AA for Standard & Poor's, which is really great. Then the last piece that the MD&A discusses is your next year's budget. As noted here, your fiscal year 26 budget was prepared with major tax revenues projected to be approximately 5% less than the previous year's collections. However, during the first quarter of fiscal year 26, the general fund revenues have been running about 2.5% better than projected. Also, in the 2026 budget, the city was able to allocate approximately $10.9 million to various capital projects that are funded by the general and special revenue CIP funds. And it still does contain the planned continuance of expenditures related to the vehicle replacement program with funding of approximately $1.8 million. The other thing that is not included in this draft but will be included in the final draft is that the parking department revenue and expenditures will be moved into the general fund for fiscal year 26. So effective 7/1/25, it will be reflected in the general fund going forward. And that is your key highlights for the year. Are there any questions? We had no issues, no compliance findings in the single audit. Everything was great there. Again, no internal control matters noted. So we appreciate the time that the city allows us to be here. I know when we're on site, we kind of take everybody's time up, but we appreciate your help.
Well, we hope you'll have more room to spread out next year. So.
It was
It was fun. It was fun.
And we certainly appreciate you all and diving into this so that we're financially responsible for our taxpayers, and want to commend Robert Holt and all his great staff and our department heads who manage these budgets and do such a good job.
Absolutely. Agree.
Good job.
I don't think we'd hurry up with the construction, we could probably get her in there.
Yeah, that's right.
You gotta get that.
You know, a good construction company.
Construction company out there, so.
And you're collecting
She'll have to take
this
these back
correct?
up. You will.
Yeah,
We'll get, at mid-year review, we'll have official
Yeah,
audits.
get the manager to manage.
But I will say, other than the addition of that one sentence, there shouldn't be any changes at all to these drafts.
Okay.
I guess I need to give you mine back, and I wrote notes in it, so,
It's okay.
sorry.
It's okay.
And Eric, you're the second item on the agenda tonight, so you should have to stay.
Any other comments, questions, or anything? With that, I'll just entertain a motion to adjourn.
Motion. Second.
Motion second, all in favor, say aye. Aye. We are adjourned.
Thank you,
Thank you
Mayor.
very much.
Thank you.
Thank
for having
you.
me.